So if you're looking for low risk trading strategies, this Q&A is for you. I get this question almost every single week. Okay, so I get questions with a consistent theme like this all the time. I want to take a little bit of time out now just to go as detailed as possible and answer this question as fully as I can. Now, first of all, I can see that you've asked a question from an arbitrage betting perspective. And before I start, I want to say sort of a disclaimer. Trading is not like arbitrage, it's not completely risk-free, and you will be expected to make losses en route. It's just part and parcel of trading. So you can't really treat them the same if that's where you're coming from. So first of all, in terms of low risk strategy, there's sort of two elements I want to mention to this. Now the first thing is there are some things and some strategies which are lower risk than others, which we'll speak about in a second, and I'll give you a few examples. But before that, there's a very important point to make, and the point is it doesn't necessarily matter which strategy you're employing or which markets you're trading or which sport it is even. There's only one thing you need to bear in mind to lower risk, and that is your own behaviour within the market. So if you want to lower your risk and have a lower risk strategy, then you may need to trade off some of your potential profit. Now, in submitting some of that potential profit, you're obviously limiting your risk. And that is the position to operate from. I think too many people get sucked into the whole greed angle, and it goes the wrong way, and then they wonder why they come unstuck. So if you want to lower your risk, there's a couple of things to this. Now, first of all, if you lower your stakes, then you increase your margin for error. Everyone prefers the most liquid exchanges, which is why everybody focuses on trading Betfair, because there's more liquidity. But basically, when there's more liquidity, then there's more margin for error in the sense that you've got money to get out against, you've got money to get in against, and you know the spread, the margin is tighter. So if you want to lower your risk, lower your stakes. As you progress and get a little bit more advanced with trading, you'll find as you increase stakes, it becomes a little bit harder, because effectively you're just decreasing your edge in terms of profitability whilst trying to increase the return, being greedy. So lower the stakes is number one. Number two is lower the sample. Now, I hear this all the time. It's one that I get questions via email too many times a week, and people basically are trading what I call maybe trades. They're putting trades in the market where they didn't know or feel strongly about the situation, but they thought they'd trade it anyway, and then that affects their bottom line. And when you cut out the maybe trades, you just find naturally that profits increase overall. And yes, it's not the fun experience, but we need to remember that at the end of the day, if we're here to trade, we're here to make money. We're not necessarily here to seek a thrill or have fun, or you know, some people see it as recreational enjoyment. But at the end of the day, it doesn't matter what you're doing in life. If you're doing it recreationally and you're doing it for fun, then chances are it's not going to be most efficient and you're not going to be profiting from it. So take the fun out of it and reduce the sample. Only take the trades where you consider it to be a strong edge in your favour with what you're doing. The rest of them, just cut them out, there's no point. So lower the sample, lower your stakes. That itself will drastically reduce the amount of risk to any trading that you're partaking in. And I guess another thing which I hadn't really thought of previously is knowledge. So the more knowledge you have on a situation, then the increased chance you have to succeed. You just need to, you need to ensure your own success. So I'm not talking about having like 10 screens. That's just ridiculous, and that just adds, far more options. But what I'm talking about in terms of knowledge is, do you understand the characteristics of this betting market? Do you understand its potential limitations? Do you understand where you're going to manifest some kind of edge or advantage in this market? Because if you don't understand it fully enough, how the hell do you expect to make any money from it? And that doesn't necessarily mean you need to be a horse racing guru or a football guru. In fact, I had someone comment recently on the Facebook page saying that, I didn't know loads about racing, and quite frankly, I don't really care. It's about understanding the market and the limitations within the market so you can then make money from it. That's how money is made through betting. So increase your knowledge, decrease your stakes, and decrease your sample to the only good quality trades. Finally, the only thing to mention, I can see you come from an arbitrage background, is there's the mentality aspect. So in arbitrage, it's black and white. It's a 1 and a 0. It's, you know, there's no negotiation. It's either a yes or a no. The arb is on or it isn't. In trading, your decision making is influenced by your feelings and emotions a lot. It's something I've banged about elsewhere, and it's, you know, I should probably stop talking about it right now because it's the one aspect that everybody should be focusing on and should be listening to, but quite frankly no one listens to, which is just a mistake, a foolish mistake. But basically focus on your own mentality, feelings and awareness in the moment, be it trading or outside trading throughout life. The most mistakes are often made when somebody isn't aware, or they didn't have the knowledge, or they didn't know that something was, you know, they couldn't see it for what it is. Their perspective was biased. So all of that aside, keeping it real, keeping it realistic, you just need to focus on those elements more than anything, no matter what you're doing, if you want to lower your risk. That's my wholehearted, full, very strong opinion on that. Now, I said I'd give you a few examples, so I will. There is no golden bullet, which I know a lot of people are seeking for. Get that all the time as well, questions like that. But what's just the one thing you need to do for X and Y and then I'll get money? No, it doesn't work like that. Things are changing all the time. There's so many variables to consider. But if we were to look at a few examples, take for example greyhound racing. So it's well documented online. Greyhound racing, there's very wide spreads. There's no money in the market up until the last couple of minutes and liquidity arrives. So there's an opportunity during that little frame, during that window where liquidity goes from nothing to something, to leave bets outside the market and potentially get like a fat finger where someone bets, matches your bet at a very unfavourable price, and then you can trade it out where the price should have been. So that is very low risk. Downside being chances of it happening regularly, race after race, is quite low. And also you're not going to necessarily get on for a very large stake when somebody matches a price which was completely unfavourable to where it should have been. Greyhounds as well, while we're on it, are typically quite bent, so you'll find, it won't be every race, it will only be a very limited sample, but they'll find that some venues, and I don't want to say too much, but at some points there's very heavily touted gambles, and the price comes crushing in, and in those ones they may be the ones you want to sit back until they come and then you want to trade them. It's just how often you have to wait for in between, because we can't choose when there's going to be this massively wild gamble. You just have to sit and wait. Tennis, if we look at tennis, you only got to look at the game structure and different momentum of behaviour within tennis. I'm thinking more towards stuff that's probably in the tennis trading guide now, but there's a video in fact, but you can exploit momentum at certain points within a tennis match based on not what's happening on court as such, but what's happening amongst the crowd of people that are betting on that particular tennis match. Try and make it even across the different sports. We go to horse racing, back into lay is just a primary example. It's a very low risk offering whereby, you know, a horse behaves in a certain manner again and again and again and again. You just need to confirm or deny that at the right point in time, and jump in and jump out, and you can steal a few ticks really quite easily. Sometimes on a moderately sized stake as well. So that's a great angle to take, a very low risk. Again, just like the rest of them, unfortunately it's not the answer everyone wants, but it's not going to be race after race. Football, I'm sure that sort of same momentum applies, and time delays and team sheets and stuff like that, they're quite low risk. But again, it's not something that I'd really do because the opportunities are so few and far between, and you have to stake very large to get any kind of, you know, substantial return from that. But low risk angles, that's a few things to think about there. But you know, the main thing is to reduce the frequency and stakes if you want to lower your risk. Downside being you're limiting your potential profit in the process as well. So that answers that question fully. Hopefully anyone that asks it in the future, this will be the one for you.